right, Bruce, back at you here. This is an initial launch for me. I haven't covered Tesla, but it's a very popular fund, number one. Number two, I'm very bullish on Tesla. I own a fair amount of Tesla, and I'll play Tesla for a while because it's an income fund, but there'll be periods of times where it gets capped, and I'm also going to start doing the reasons why I'm so bullish and technicals and all that, but I'm not going to introduce it really this first go around. It took me a while to capture all the data. You know, when you start a new fund, just like I did on AMZ, you really have to collect 5 to 10 days and catch yourself up. What did they pay last month? What are all the accounting? What are the trades they've done over the last 7, 8 days? So that matter for this month because I tend to go from X dividend date to X dividend date for my accounting purposes. I think the actual Tesla fund tracks it from the first of the month to the end of the month, but it doesn't really vary widely. It's not going to affect the payouts and the money, so it doesn't have to be perfect. But given some of that, I want to give you guys the best that I do and the way I do it. So I did go back and capture previous days and so forth. So let's jump in here. So with Tesla, it has the most shares, I believe, of any fund. Coney is close. NVIDIA has a lot, but when you have a higher price, NVIDIA, last I checked on AUM, assets under management, the number one fund was NVIDIA because take share count for YIELDMAX times the price, and then you get a figure for assets under management. Well, Tesla is still pretty cheap in the $16, $17 range, but they have a massive amount of shares. So it kind of reminds me of Coney, and they have dual synthetics. And I'll tell you what I mean about that. So let's jump in here. And I think you're going to look forward to my technicals and how to play this beyond just the income game. But clearly, I think it can be good income because I think Tesla will be very bullish going forward. That doesn't mean it doesn't go through, a big impulse wave, 80, 100% up and then retrace 50% of that, right? But on the end, we'll get capped on several scenarios like we did not too long ago while I've been watching it. But overall, it's having a pretty good month. So let's jump in. So what happened? Well, Tesla went up from 252.64 to 256.56, right? So it went up 1.55. And Tesla went up 1.6. So that can happen. It's not capped. It's underneath its weeklies. Its weeklies are making money. Another key thing for Tesla coming up, besides just their plethora of things that Elon Musk has got in the work, is they've got earnings coming up on the 23rd, and I believe it's after hours. It is. I just looked at my notes. It's after market close. So that certainly can be a mover. It shouldn't impact too much this week, but they did make a trade today, kind of interesting. So let me recap since I haven't been doing the dailies if you're following me now for Tesla. So over the course last week, they had been writing 719s. They wrote some on 79. They wrote some more on 712. And nice income, right? The bulk were $5.96, and they wrote 275 strike. And even on the smaller quantity, it was a 275 strike. This must be a typo where I've got 719 at 237. I won't worry about it for the moment, but I'm sure it's a typo. So today, what did Tesla do? Well, let me show you. So when I look at this sheet here, Tesla put 3 trades on. Whenever you see a buy, a sell short, and another sell short, and they're all on the same quantity, you always know that it's a buy, call, sell short, a put on a synthetic. And remember, I told you they have two. So they have a 260 and they have a 265. And these are out to 816, right? So they got about a month to go. They sold since they're close, but they're still under. They're able to buy the call and sell the put and collect a little bit more money on the put because they're underneath the 260. Once you get above 260, then you're paying up for that call premium because it's got some built-in money. If it's trading at 263, $3 of that call is already in the money premium, right? Plus your time value. So that's what they did. Let's follow these. Let's take the simple one in front of us first, since they're all the same quantity. So remember, they went out a week, and what is next week? Next week is earnings, right? So they have earnings going on the 23rd, which is what day of the week? That's Tuesday. So the weekend's on Friday. So that's definitely going to impact it. But I like the $5.30 a lot. And I like that they at least went up, right? The stock's trading at 256. So they gave themselves some room. I mean, my gut is they don't blow out earnings. I know Elon positioned it pretty well on the car sales, but I don't know. And yet I'm super bullish, but my bullishness comes beyond just their car. They have so many other things under work. And I'm going to talk about that. I'm going to do a whole video on why Tesla, and I'll put it under my channel. And those of you who own Tesla probably going to want to know that, and you're going to want to know other plays because not only will I go into a lot of data on Tesla, where it's in a new impulse wave, where it could go to over the next 5 years, but how to play it when it's running really strong and you get capped in Tesla. Again, there's some people that want the income, understand, but I'm an active investor. I like to do a lot of things. Okay, guys. So that brought in 532,000, right? So in addition to what they've already written on the other scenario. So I'll show you that at the end, but we look good, right? We're continuing to collect more money. Let's go out on the weekly. And actually, I should show you the synthetic. So here's the synthetic. They put additional 359,000 that they collected, the difference between selling the put for 2 million and buying the call for 1658, right? So you got 359,000 in there. And so far they have a $6 million loss for the overall position. But as soon as they get above 260 on this strike, it'll look a lot better. And they got out till 816. So let's go look at the weekly now that that's been added. So again, I try and color code these. This is the big bulk of strikes and they look really good. They wrote 17.7 million worth of call premium and they've collected 80%. So it would cost them 3.4 to buy it back. Way to go, fund managers. Good job. I don't think there's a stimulus for it to run past 275. I sure don't see it this week. But again, we're hitting all-time highs. Although I'm seeing money spread out, as I said it would happen, it's not necessarily congregating in the Mag 7. It's going out in the Russell and it's going out in the other, 493 stocks of the S&P 500. Which always happens. You get a rotation there because and even Tesla wasn't getting its fair share of the Mag 7. It really was NVIDIA and 3 or 4 of the other ones that were getting all of the money. And now you're seeing NVIDIA struggle a little bit, right? I mean, it could go down to $100, but it may hang around in this area. I still think it has room to run as long as the market stays healthy. These are definitely interesting times. Okay, so let's jump into holdings because I love holdings, right? So I was already set up to have dual synthetics because I just borrowed them from Coney and brought them over here. So our first position, the big one, right there. So we added 1,005 contracts. So we took this to 3785, and we have a deficit of 6.7 million, right? That's our underneath it. But that's fine. We got a month, no issues. The other one that's a smaller quantity up at 265 is only 951. So how do they look from yesterday? And by the way, I didn't take both numbers and add them because this one's pretty insignificant. If this one comes up and they're more even, I'll roll them into here. So I'm just using the 67 for comparison. Just like on these other dates, I was using this top bulk number. So we went from a $24 million loss, previous day a 30 million, to only a 6 million. So that's nice. Good job again just on Tesla's movement. So what's fair value? So I love this, right? These fund managers may want to think about buying these back on Thursday. But let's see. If they don't see a threat, but if it moves up close and it's, a half a million and you've gotten 17.7 and you can buy it back for 500,000 and you're up near it, I say buy it back. Don't take a chance. Okay. You don't know. Elon may come out and announce something. You don't, when you have 90 something percent and it's a large number, take it off the table. Give yourself 6 days and write another aggressive one out there. Okay, so 80% captured. So where are we with the actual close? 1711, and fair value they're saying 1713. So you can buy it cheap for 2 pennies under market, under NAV anyway. All right. So you see it right here, right? You see the 115. What did they sell that for? Quite a bit more, right? When you go back and look, those were like $5 and $6, I think, because there's several of them. Oh, and I got 237. It's not a 237, it's a 275. That's where that craziness came from. Sorry about that, guys. When you set something up, you're thinking you're dealing with a lot of numbers and you transpose. So yeah, this what constitutes that, right? And I'm sure this is the same thing, 275. So the bulk of it, this is a small collection because they did it later. They were further out on 7/9, writing out to 7/19. So look at this, almost $6 and $6. So they got healthy money, healthy margins on that. Kudos. It makes me get more of my Tesla, and I may start playing some of my own calls and synthetics on it. But I do like owning some Tesla for collecting income. But I love doing some of my own options, especially when I see these kind of premiums, happening in the underlying in Tesla. Okay, so I think that constitutes everything. Let's go over and look at our payout projection and see how we're looking. So I didn't really have all these numbers, but I could see what they were. So they paid out $1 even, right? Dollar and then way over here 5.3. So that was nice. How they doing this month? Well, when you add all these synthetics together, right, on what they had, they're doing pretty well. I mean, the synthetics are killing it. But the short call is still under because remember, they got run by. They got massively run by. And just like is happening in Misty and Coney and Ybit, right? But they're really looking good this month because of that synthetic. Now they can catch up, but guys, that's also accounting for the money that's been collected. So we're going to win that. So that new money will help the situation as well. And that's in there. But I feel pretty good about Tesla going forward because I'm very bullish on it. We just need to get these fund managers aggressive in writing out higher, which for some reason they seem to be doing in Tesla. So kudos to them. Okay, guys, that's what I got for you. I promise you in the next few days, it may take me to the weekend. I'm going to do a very special video on why Tesla, why I'm so bullish, what are all the components, how else can you play it besides an income strategy only, and go into great depth for you guys because I've already done the research for myself. It's just organizing the video. Okay, guys, again, this is not financial advice. I'm not a financial advisor. This is for fun and entertainment. Hope you are entertained and hope you look forward to learning and hearing more about Tesla. Again, for any of you that lost money on it before and you're Tesla haters, spare the comments, okay? Nobody likes it when they buy something at the wrong time. And clearly, these income funds are not structured to play catch up. If something goes down rapidly, they're going to go down 90 something percent rapidly, just like the underlying, but they're going to pay you income. But so when people say it's 100% of the downside, it's not. But if it bottoms and roars back up, you're not going to keep up with that roaring up, even though you kept up with the going down. So, if anything, be careful of that scenario, right? So, always if you have to collect income, I get it. If that's your only choice, you're passive, you're working, it's in a 401k, a Roth, an IRA, and you just want some income, you don't do options, you don't buy 2Xs, you don't have time for that, then fine. Go in something that's bullish. As you guys know, I like GDXY. Why? Because I see that sector bullish. I'm bullish on energy. I'm bullish on a few tech stocks. Okay, not the NASDAQ overall, but a few tech stocks. And so, given all that stuff, you need to be armed if you're active and have the ability to be active, and protection, even if you don't have the ability to be active, but you're throwing tons of money at one of these income funds. Are you protected if the market goes down 20 or 25%? Not saying it will, but anything can happen. And that's why I gave that advice earlier today for the very young investor who goes in, grabs margin, throws all the money he's got at something, and the market goes down 5%. He gets margin calls and he's lost everything. Then he's angry for a long period of time when really he just needed. And sometimes that's a teaching tool. Anybody that tells you they've never lost on a trade is lying. I've lost many times. I've made stupid mistakes. I've done market orders when I was, yeah, market orders when I was very beginning. So I always try to help you guys with things that younger people or even inexperienced people who can be older, even if you have money. I understand. Okay, guys, I'm going to let you go. Bye for now. Have a great day ahead.